everybody, and welcome to the 75th edition of LM's Weekly Wrap, our weekly program to cover the market related developments. I think this has been a very eventful week for the markets. Last week also we've seen very strong momentum in the IPO listings, and this week I think we saw the General Assembly elections, and the outcome of that was quite on unexpected lines, much better than what the markets had expected. This week was full of action. We saw a lot of themes in the market play out in the market. So that is one thing. Today we had the RBI policy meet on expected lines. The RBI has gone in for a status quo, and we have the Federal Reserve meet too, which is expected. Joining me today is Jash. Jash, please welcome and kindly take us ahead on the global developments as well as the domestic developments, which will be followed by the sectoral outlook from my side.
Thank you so much, sir. We are very thrilled to be here today as Nifty has hit an all-time new high. It has gone beyond about 20,950 levels, slightly north of that. So I think it's been a dream run for the investors and the traders especially. It has been a one-way side. Last week we said Nifty hit a new high. This week again we hit a new high because of the general elections favoring a particular political party. So I think the markets have taken that extremely positive. So basically, if you see, there were a few parts of the market that moved upwards, especially the public sector undertakings and certain groups. So I think it has been very eventful. The traders have had a dream run, and I think domestic is doing pretty well. Coming to the global economy, global markets, the crude has hit a low of $75 a barrel, which is also helping to fuel our market. I think this is because of concerns of China's consumption. I think there is a lack of consumption over there, so crude is hitting a low, and that poises very well for the emerging markets. So we're seeing more and more attraction in the emerging markets now. That being said, the global markets have been, I think, have gone into a December mood now. They have been quiet. There's not a lot of action over there. And a very important front on the Israel-Hamas war. I think the Hamas has started surrendering themselves to the Israel. We need to wait and watch over there what happens next, because if this is true, this marks end of their war, and I think that is a very positive sign for the global markets. Coming back to India, the wedding season has picked up very quickly, and it is at a very large scale. We are seeing a lot of weddings happening across. We are seeing the lot of sectors like textiles, jewelry and everything hitting new highs. I think that will be taken over by Nirav sir in detail. But I think that with this we are very strong on the economy front. The data have been very positive, and I think we'll keep doing good. But because we are at all-time high, I would advise for everyone to keep booking profits, because if you don't keep booking profits, because we are waiting for a healthy correction that comes, because if the healthy correction doesn't come, the strength for the market to go up from above here will be very, I think, lackluster. The markets will become lackluster then. So I think we are waiting for the healthy correction. Keep booking profits and stay invested. Thank you. I'll hand over to Nirav sir.
Yeah, thank you, Jash. So yes, as rightly pointed out, it's been a dream run for the markets in this particular week, and in many ways, this week was a testimony to what BJP stands for, what has been their ideology with respect to the different sectors of the economy. I think they have given a lot of thrust on PSUs, on restructuring of the PSU operations, that is the public sector undertakings, and how to improve their operational efficiencies of the PSUs. So if one were to take into account the response which has been given by the different sectors, then I think that it's been the PSUs which have run away in the markets. So starting off with PSU banks, I think BJP has pushed in for the restructuring of the PSU banks, and by calling in for mergers and synergies between the different banks, I think the operational health of the PSU banks has improved drastically. So we've seen the PSU banks which have cheered the outcome of the assembly elections, which is in many ways also being considered as a semi-final. Second is the performance of the oil marketing companies. There is no compulsion now on the government to really reduce the pump prices to indulge in populist measures. The reasons for this are twofold. One, in the global markets, we have seen the crude oil prices correct sharply from $100 to near $75. In our previous meetings also, we have pointed out that $75 appears to be the most reasonable price from a buyer as well as a seller perspective. So it's a very reasonable price to expect, and with crude oil prices at this level, I think it's a very big positive as far as India is concerned. Now, secondly, BJP government is not under any compulsion to reduce the prices at the pump to indulge in populist measures as far as the elections are concerned. Third, the refining margins have been slowly increasing, and they've been improving with every passing quarter. And we are also seeing heavy investments being made by the oil refiners. So it's a kind of a win-win situation for the oil marketing companies, and that's one of the reasons why most of the FIIs and the expert firms have recommended buy calls on PSU refiners. The another category is the power sector. I think the power sector has been virtually on a tear, and we've seen power sector stocks zoom in trade. Yesterday we saw some very strong momentum in Tata Power, which got a double upgrade. We are seeing very good momentum in JSW Energy. We are seeing good momentum in Torrent Power, Reliance Infra, Reliance Power, Adani Power, you name it. And most of the power stocks have been on a tear. Now, power is a composition of different things. You have mining, coal mining, which is associated with it. You have power generation, you have power transmission, and we have power distribution, which is associated with this. So it's a very wide sector, and the most positive aspect about this whole thing is that previously we had the T&D losses, which are the transmission and distribution losses, where power was distributed freely due to election measures to gain in the elections, and at the same time there was a lot of power theft which was happening. A lot of people were stealing power and not paying for those bills. As a result of this used to get masked as AT&C losses, that is aggregate technical and commercial losses, which are also known as transmission and distribution losses. Now, in some states, these losses were as high as 25 to 30%. Now, because of the measures restructuring which has been adopted, we are seeing that there is billing which is happening. There is a lot of focus on collection, etc. measures. As a result of which, the AT&C losses are likely to come down to 10 to 12%. So the overall health of the power sector has improved. Power demand has been on the rise. So we are seeing Coal India do very well in trade. Power generators, as we discussed just now, NTPC, etc. Power transmission, that is Power Grid Corporation Limited, and the power distribution companies, the equipment companies like BHEL, the meter manufacturers, etc. do exceptionally well in trade. So I think the overall power ecosystem has done very well in trade, and it is the latest to join the bandwagon of the defense and the railway stocks. So I think to sum up, we've seen all these pet sectors of the BJP government do very well in trade during the last 1 week. We have also seen a very strong momentum in Adani Group stocks, and I think virtually on a tear, the Adani Group stocks. Important to note is that after the Hindenburg allegations, we had seen the market cap of the Adani Group stocks fall from around 19 lakh crores to 9 lakh crores, and in a matter of few days, we've seen the market cap gain by around 3 lakh crores. So we're back to around 14 lakh crores, close to 14 lakh crores as far as the market cap of the Adani Group is concerned. So in many ways, I think Adani Group has been a very big beneficiary of the recent outcome of the recent elections. So I think new markets, new themes emerging continuously. As far as LM weekenders are concerned, I think a couple of our weekender stocks achieving their targets. We had yesterday SJVN, Satlej Jal Vidyut Nigam Limited, which was recommended at 64, which has achieved its target of 90 rupees. We have reiterated a hold over there. Bharat Electronics Limited, which we had recommended at 125 with a target price of 162, has achieved its target. We have reiterated a hold over there. Some of our Diwali picks have done exceptionally well and faltering at one place also. So we've seen good performance as far as JSW Infra is concerned. We've seen good momentum in Geo Financial Services, LT Foods, the likes of MOIL and India Energy Exchange. I think sugar companies were in for a shock because of yesterday the dictate from the government to reduce the allocation to the ethanol sector. So I think Sri Renuka Sugar being hit sharply on account of this, but the industry is confident that it will be able to make representations to the government and of course try to figure out a way for this. But nonetheless, the near-term outlook appears to be negative. Important to note is that food inflation remains the biggest concern, as pointed out by the Reserve Bank of India today. They have indicated that the supply side shocks have become very frequent and very intense. So the language which has been used is that what needs to be monitored very intensely is the food inflation, because this can spike the vegetable prices on a very frequent basis and spike food inflation in the months of November and December. So I think the output of wheat, spices, pulses, etc. is also being monitored by the government, and at this point in time I think I would reckon that food inflation continues to be the biggest concern, and that too on account of frequent supply side shocks which are impacting household consumption, etc. Rest, I think, barring the sugar sector, rest the market continues to be in good health. To sum up, I think we feel that mid cap and small caps have run up quite sharply. So there is definitely a reality check which is there on the cards, and large cap is likely to do well. Many things to discuss, but time constraints. So I think I'll hand over to Jash now for the closing comments.
Thank you so much, sir. Thanks for the insight. We would like to clarify that we had said that we were going to deep dive into each sector from this week, but because there is so much happening in the market, we would postpone it to next week. So stay tuned for more updates. Thank you.
Thank you.